Thanks very much, Mr. Smith, and let me invite honorable members who want to make comments and ask clarity-seeking questions to do so. Dr. George, over to you.
Thank you, Chairperson, and thanks very much for the presentation. I've got three questions. The first one is that my understanding is that one of the problems that the FATF had was that we were not holding to account those individuals and groups that are committing money laundering or, facilitating the proceeds of crime and financing terrorism, etc., that they were not being held to account, not being prosecuted, not being caught, etc. So how will the law that is now being changed deal with that problem? Because, obviously you can make any law as tight as you want to, but the proof really is in the implementation and in the consequences for those people who break the law and behave in an inappropriate way. So I think that's the first question. The second question is that I'm not quite sure how the FATF process works. Now, obviously, a year ago in October, almost, they issued some recommendations. And now, of course, we're responding, changing FICA and various other acts. They would then have to apply their mind to, once we've processed this law, whether they're satisfied that it covers the problems, and then they would have to then decide whether it's good enough straight away or whether there needs to be time to see whether they work or something. But my understanding is that that decision is going to get made somewhere in February. So what's concerning me here is that there are significant changes here. The industry is very concerned about them because it does cost more to comply then, obviously. However, it is necessary for us to do something about the problem that we have because we really do need to comply. So what we obviously don't know what the outcome will be, but what is that process that we can, monitor? And then finally, this is the burning question that I think on everybody's mind is we got the report from FATF apparently last year already in October. I don't know all the details, but that's my understanding. We are now in August, nearly a year later, and we are running out of time. So what happened, as we saw in the committee, that we have to move with speed. We have actually is a lot of pressure on everybody, frankly, the industries, etc., all those affected, because we're now on this burning platform. And when you're on a burning platform, you might very well make mistakes, or you take a very blunt instrument to a sort of problem that needs fine-tuning.
Dr. George, is he having a problem of connectivity?
A question that needs to be asked. Thank you, Chair.
Thanks, Dr. George. Any other question or comment? Can you respond to those questions asked by Dr. George in the meantime?
Sure. Thank you, Chair. I missed what he was, he froze. So I don't know what his last question was, but let me just try and start off, and Honorable George can tell us if we've answered his last question, whatever it was. I think that those are actually very relevant questions. Obviously, these schedules are just part of the story, but in terms of the process, yes, if you look at the mutual evaluation, just to remind honorable members, there's two aspects of it when they reviewed us. The first aspect is that there are 40 FATF recommendations. Okay, and they use the word recommendations, but they mean standards that members commit to complying with. And secondly, there's effectiveness measures. And there they have 11 measures, and they call them in their jargon immediate outcomes. And our problem is that we were weak on 20 of the 40 recommendations. We got the 2 low categories, and which is effectively a fail. And on the 11 immediate outcomes, I think we got 3 that were were very poor, and 8 were what they call moderate. But we deemed to have failed on all 11. Now, when you deal with the first one, which is then referred to as technical compliance, by the way, on that one, most countries, you find that over time, that because the standards are always increasing, the recommendations they get change. And so they are inevitably, if you stand still, you are inevitably going to fall behind. And countries generally have 3 years to make up for it. We are actually going to make up for it effectively in, hopefully, a year and a half or a year and a quarter. So what we've done is we've got cabinet approval to bring in a general laws anti-money laundering and something bill, which cabinet's approved, and which, as we speak, the state law advisors have certified, and our staff are reading the first proofs, and hopefully by tomorrow they'll do the second proofs, and we're really hoping that on Thursday they will be formally tabled or introduced in the National Assembly for the committee to consider. So what those will do, and we are under pressure to have them passed before the end of the year, and if we were to achieve that, that bill will deal with, I don't know offhand, but I think 14 of the 20 recommendations. There's another bill, I think don't ask me, it's the prevention of Dr. Tara bill, which the Minister of Safety and Security introduced in July. And they deal with 2 of the recommendations. They're really important recommendations because there's 3 core recommendations that we fail on. We have to pass those. And those will be passed, those two of the 3 core are in that bill. So that takes account of 16. Now, even though we don't have to meet all of them in one go necessarily, the other 4 will deal with through regulations and other processes. They don't need hard legislative changes. Okay, so that's our assessment of the bills. So we think, and what FATF requires by February when we go to the plenary, that basically those laws are also in effect. They can't just be passed by Parliament, enacted into law by the President by signing it into an act, but they also have to have taken effect. So that's what we're going to have to do. And they relate to beneficial ownership and all the gaps that there are in our current legislative and regulatory framework. So we think that we should be able to pass. And let me say, it will be a huge step forward in South Africa making real progress and demonstrating that we've made progress on our anti-money laundering and terror financing framework. But it's not going to be enough. We have to do much more than that. We have to show that we have the capability and the will to implement those laws. And I guess that's what gets into the issues of, on the 11, there's, whether, firstly, if you take a step back, I think what FATF is saying, we've been naive, that we're really dealing with criminal syndicates, and South Africa's capability to deal with criminal syndicates is poor. You need to have a proper risk assessment, a national risk assessment, a credible one, that gets all the authorities aligned. So that's one of the things we're working on. We're almost there with it, we think. And that will deal with one of the 11, to have a credible national risk assessment for money laundering and terror financing. So just by having a credible plan, we'll pass one of the 11. Then we'll have to show that there's what we call number 3, 4, and 5 are more with how we regulate. So these schedules will certainly come in. How do our regulators, when they deal with money laundering, do they have a document that says this is how they do it? Do they have a manual? They can't just say we do risk-based assessment. They actually have to have it as part of their routine work and have manuals so that there's consistency in their approach. And, we think that certainly the financial sector regulators should be able to pass the test, and they've got to demonstrate that they are implementing beneficial ownership and making it available to the criminal justice authorities, that it's readily available. So that should deal with 3, 4, and 5. But within that, there's many what's called the designated non-financial sector providers. And some of them are covered here, but others are already covered. So it would be the legal profession, it would be casinos, it would be, gambling institutions, it would be motor car dealers, estate agents, etc. And some of these other ones that we're dealing with in the schedule will all be covered by that. Now there's no supervisors. That's why we're saying that necessarily that there may not be any supervisors, because some of them may just be pure registrations. And that's where the FIC is coming in to try and fill the gap. So we think we should be able to make progress in 3, 4, and 5. Then comes the tough part. So number 2, 6, 7, and 8 deal with the Hawks, the NPA, the police, asset forfeiture unit. Do we investigate money laundering and related crimes? Take state corruption. It's mentioned in the report. Are there are there investigations? Are there prosecutions? Are there asset forfeitures? We're going to have to demonstrate that our authorities are actually succeeding and they've made progress. And then there's 9, 10, and 11, and it's also linked to 2. And by the way, 2 is, are we then trying to get the money from Dubai or Hong Kong or America or the UK or Switzerland, wherever the money is gone to? Our authorities trying to get back the money that was stolen from us. Then there's 9, 10, and 11. That is whether on terror financing, the concern there, I should add, is not just terror financing for acts conducted in South Africa, but South Africa is seen as a financial hub. And many, and there's some evidence that such groups are operating in South Africa, which is like a safe haven, and able to then fund other movements and so on, or actions in our continent and elsewhere. And that's where we need to demonstrate much more progress. And so you get our intelligence agencies and the police, and also when the UN Security Council designates some people, we've committed by international agreement to follow through. We've not followed through for 5 years currently, okay? It sits with safety and security or in that domain, and they haven't moved on that. So those are the issues that come up. And I think we can make progress on 8, 9, 10, and 11. That should be reasonably easy. The toughest is definitely in the criminal justice system, where we'll have to demonstrate progress. So in terms of the process, what happens? We have to give a first report at the end of August. We'll be just on the technical compliance and legislation. we'd be able to say at least that, look, we're doing this. We've tabled the two bills and they're before Parliament. Hopefully by October, if we can show that we've made progress, that, for example, in the Assembly, we've made, the committees are at an advanced stage, or it would be nice to say that the NA has already adopted it or close to adoption, and then it's on its way to the NCOP. And hopefully we can then report that by the end of the year, we think we're reasonably confident it will be passed by Parliament and then enacted into law. So the first report, end of August, second report, end of October. That's the bigger report. We'll have to demonstrate on the technical compliance. We'll also have to demonstrate the effectiveness by then. So we are busy, and we've been very busy, Chair, meeting with departments, with agencies, with different clusters, so that they can report on the progress that they've made. They can say we've got our manual, our risk to do risk-based assessments. They can say we've had so many cases, and this is where we are. If we can do that for all the immediate outcomes and show that there's sufficient progress, look, it's going to be very tough. The chances are we'll get grey-listed, but I still think we can avoid it if we demonstrate progress, and I think we can, okay? And so what will happen is there's a joint group done with the regional body, Asamale, and the FATF Secretariat. I want Peter and them to just correct me to get the process exactly right. But what we then do is over December, we talk to them. There's there'll be to and fro on the info. And in January, we'll have meetings. We're not going to be able to take any December break. To prepare, we'll have a 4-hour or 5-hour session with the joint group to then deal with any outstanding issues that we've not dealt with. So that's the process. Then we go to the FATF plenary in February. And that's where we need to, they will look at the joint group's report. And if we've satisfied everything there, hopefully they'll approve it. And we're not on the grey list. We'll still be under possibly enhanced follow-up, still to follow up, because we have to show consistency that we've changed over time. So we'd still be on such a list. But even if we do get onto the grey list, hopefully it will only be a few items, and we'll have our own action plans, not action plans imposed on us, which we'll have to follow through with. So that is the process. And maybe just to add that the General Laws Amendment Bill changes 5 laws. It changes the FIC Act, it changes the Financial Sector Regulation Act, the Companies Act, the Non-Profit Organizations Act, and our current Trust Act. I forget the exact name. And in fact, the challenge is going to be it's all in one bill. How does Parliament, what process does it have to bring the different committees to process the bill? We are in discussions. I know our minister has written to the Speaker just to get some guidance from Parliament, and no doubt the minister, after the bill is tabled and you see, we may need to engage or just to answer any questions Parliament may have, but obviously it's Parliament will guide on exactly how the process should work. But that's going to be the challenge that we have. So that, I think, I don't know, Peter or any of my colleagues, do you want to just add onto that in terms of the FATF process? Have I missed anything? Have I got anything slightly wrong? I don't know if you can come before I answer the other question.
Thanks, Mama. I think you've covered it well. I don't have anything else to add.
Okay, thanks, Peter. Honorable George, I think that covers both your first 2 questions. Your third one, you cut out, so I'm not sure if it's been answered, Honorable Chair. If not, Honorable Chair, you can guide us and just repeat the question so we can answer it. Thank you, Chair.
Thanks. Dr. Slope, you want to clarify something?
Yes, Chairperson, I do. There's a number of questions that I have here.
Chairperson, I did have a third question that the acting DG did not get the last one. So would I have the opportunity then to just put that question again?
Oh, it was by the time we couldn't hear you. You lost connectivity. As you have heard the acting DG that he didn't hear you very well.
Yes, I understand.
Bring that question back again. Dr. Slope will come back to you.
Okay, thank you, Chair.
Okay,
so I'm not sure why my connectivity is problematic, but please just alert me if I disappear, but it shouldn't happen. Thanks very much for your responses on that. It does clarify things. My question was, the last question was that we got the report last year in August, I understand. Now we are in we are in August a year later, and we are now on a burning platform. So my question is, I understand what the acting DG said about engagement with departments, etc. And this is complicated. We know this, but it is a very long time. And now we are scrambling, in my view. We're going to move obviously as fast as we possibly can, but these things take time. So what I want to know is, why has it taken so long for the Treasury to be responding urgently? Because this is a major problem. Because also, I mean, we heard from the governor of the Reserve Bank a few days ago, and now we're hearing also from the acting DG. And I mean, we all have brains, so we can all think about it clearly. It looks, obviously, we hope it doesn't happen, but hope is not a strategy. But it looks like it's going to happen, that we're going to get grey listed. And as the acting DG also said, we then need to plan for that. So, and also the governor of the Reserve Bank said, if we get grey listed, we've got to get off it as fast as possible. But obviously, if you need to implement, so you have to change the law, you have to implement it and then demonstrate that they probably want to see us demonstrating that it's working. So there is a process. So I think we're going to end up grey listed, unfortunately, but we need now it feels like we're on a burning platform, and the inevitable looks likely that we're going to get grey listed. And that is my concern, that there was not a fast enough response to this very, very significant event. Because if you look at Pakistan, I'm sure you've done all the research anyway, but I've done some too. If you look at what happened to Pakistan, there was a definite impact on the economy, very significantly. And the research is very clear. So I think we can expect something similar then. But anyway, that's the question. Thanks, Chair, for allowing that.
Okay, thanks, Dr. Josh. Okay, let me also bring Dr. Slope so that they can respond to all the questions at once.
Thank you very much, Chair. Just a few questions of clarity. I've added them in the chat in case I'm not clear enough. It seems as if there is this regulation of some new sectors in order to determine the risk of money laundering. Is this not an expensive way of doing it? Why not assess the risk first and have that national risk assessment of money laundering before expanding the regulatory net and include new businesses on which the risk you clearly do not know very well of how much laundering is taking place through them. The second question is on the high value goods. Does this also include high value services? For instance, sophisticated criminals, they send their kids to very expensive schools, like everyone in society who's got money to do so. They enjoy medical health, which is expensive bills in restaurants and clubs and private aviation services. Are these kinds of things covered in this definition of higher value goods? If not, why not? Is it not maybe because we don't have this risk assessment that is required before you regulate? The third question is how many new individual businesses and persons will be affected by the amendments? So which means parties that were not regulated before, but now are going to be regulated. And if they register with the FIC, do they pay annual levies for that registration? If so, how much is it? And what are the cost implications of all of this, especially on these new businesses and small businesses? And those are my questions, Chair. Thanks.
Thanks. Momo and Peter, I think I also raised it last week. Saika and others are very worried about the impact that these schedules are going to have on the SMEs. I don't have to repeat what they said. It is in their submission, financially and otherwise. So they are not saying that they don't want to comply, but they're saying the financial burden will be very heavy on small practitioners. How do we mitigate that? We comply, but not on the expense of SMEs. Any economy that is very strong surely rely on the SMEs. Once an economy relies on the monopoly companies, it is going to be in serious trouble. So is this not going to destroy the SMEs that are there? And as I've said, I don't have to rehash what they said, but I was very, very worried about that concern. Take us in simple detail how that will be mitigated. Because we'll comply tomorrow only to find that the other day SMEs collapses. And our economy is not doing well. So many young people are unemployed and so on and so on. So let's deal with that. Momo, I hear you making a very, very strong statement. I don't know, in a public platform like this. Are you saying that South Africa is a haven of criminals or terrorists who are doing money laundering? Did I hear you to say that, or I didn't get you well? Clarify that, because if that's what you said in a parliamentary platform like this, it has got serious impact out there. It will be like, instead of marketing our country, we're telling the whole world that here we are, we can't even deal with criminals there. It's like one government official, I think it was last week or 2 weeks ago, saying that criminals have taken over South Africa. I don't think we have reached that stage. So if you can clarify me in that regard, or you wanted to convey something while dealing with the issue of criminals. Over to you, Momo and Peter.
No, thanks, Chair. And let me start with the last point you made, Chair. I think, firstly, when you look at the FATF mutual evaluation, firstly, if you read between the lines, effectively it's saying that our system is not geared to deal with criminal syndicates, and that there is a concern that is taken root. Now, if you look at our own newspaper reports. I mean, there was a report, for example, on the construction mafia, or what they call local business forums, and the whole 30% fee story. When we talk to, I know in government interactions with business, if you look at in the construction industry, it's a huge problem. It's there. And these criminal syndicates are operating. If you look at the problem of scrap steel, or and how these networks work, if you look at the problem of, as we've seen, zamazamas, okay, these are all driven by clear economic interests. There's a whole value chain. And, we often only deal with, even when we do prosecute, it's like, I guess, the drugs trade, the illegal drugs trade, that you're dealing with the runners on the ground, and not really the ultimate beneficiaries. A lot of that has taken root, and I think that as a society we've got to accept the level of corruption, the level of criminal syndicates has become deeply rooted, because effectively we don't investigate. We're seen as a safe haven by such networks, and I think that we are in real trouble. So, to what extent are we a mafia state, a criminal state, gangs driving it? We can debate it, but it's a real problem. It's there, and we got to somehow take back our country. And certainly when you look at internal discussions that are taking place, like on scrap steel and those goods, as you can see what's happened to our rail system and so on, these are driven by syndicates. It's not just ordinary people going and getting steel. Somebody's buying. And I think, Chair, it does get to difficult issues, like if you look at some of the findings in the Zondo Commission, the problem of Bosasa, as we saw. How do you deal with the cash economy? Where clearly a lot of these transactions are in cash, perhaps, not really through the banking system. So we can have a good banking system. The FIC will get reports on suspicious transaction records, cash transaction records, but those are through the banking system. How do they pick it up when it gets to, I think, Dr. Shlopi's question on high-value goods or services? It's only through those motor car dealers, expensive houses, that you're going to perhaps find ways. And then the question is, how is that information used? Many countries are saying if you have unexplained wealth, that should also be presumed to be a crime, or you need to explain that. Now, depending on your constitutional order, how you respond to that, I think there's real difficulty. So there's no doubt that and that's why I said, when you look at the what I call the immediate outcomes 6, 7, 8, criminal prosecution system for features, the whole notion of beneficial ownership, who's the ultimate beneficiary. I think that we must recognize we are quite behind other FATF members, other of our peer countries. And we really need to take giant steps to get back to what's become a norm in most countries. And if we don't, I guess the fact that there isn't the ability of our authorities to act fast enough. So they may act, but they act too slowly. They may act, but they may be getting the runners on the ground. So I think these are deeply worrying trends, Chair, that, I think we can only try and say we may differ saying the extent to which it's taken hold, because there's no data that's easily available when you're dealing with these secretive activities. So we've got to find proxies, information to try and assess how bad is the problem. And Chair, that's why I think getting to a risk-based approach is quite important. And it's not just a slogan. It's about really how do you target, in a sense, the big fish, the drivers of some of these activities. And I think many agencies say they have a risk-based approach. Sometimes I doubt they understand the word risk-based. And if it is properly applied, so if you look at small businesses and their impact, small businesses, some of them, certainly not all, can actually be very much part of a chain in this whole process. So if you look at scrap steel, the small businesses that may be on the ground, you need to definitely deal with them. They may not be the biggest fish, but you need to deal with them. And you are going to increase the cost of compliance for them, just given what's happening on scrap steel and copper and so on. And Minister Patel has put out a gazette, you may be aware, and I think he was briefing a committee in Parliament yesterday on the proposed measures to, for example, ban the export of scrap steel and copper. And by the way, even having a gazette and doing that, how we're going to do that is still going to be a challenge for the many authorities. So I think those are all the kinds of problems that we're trying to deal with. And I think you can relate it to this FATF process, that if we are able to develop our mechanisms, they are preventive mechanisms, they are investigative mechanisms, that they should actually help us as a country to reduce this crime, which first and foremost is a crime against the people. It's robbing our people of public transport and trains. It's robbing us of electricity. If you look at copper, it might be small in terms of actual value what's stolen, but the impact is, it impacts on our electricity to the country. So the effect of these, because they're affecting whole networks, is massive. And we clearly, in any national risk assessment plan, all of those areas will have to be highlighted. The Zama problem, or illegal mines, that will need to be addressed as well. And our authorities then will need to, in a sense, those priorities or those risks will determine where they're going to put most of their resources when investigating crimes. So let me say, Chair, I'm certainly I won't even say expert. I'm not someone who's familiar with the area of crime and so on, but just watching these reports, and from an economic perspective, we can see the damage that it's wreaking. Now, let me just answer the specific questions. So just to finish on the small business, there's no doubt that this can impose costs. And again, it's only through having a risk-based approach and saying, listen, these small businesses, it's really not an issue, and have almost no reporting requirements on that. But on some, we're going to have to impose. And we can't really wait to say, let's have a risk-based approach and then do the schedules. Unfortunately, we have to do both because we can't exclude them, as Peter Smith has explained in the Act. But then how we apply them, sector, subsector by subsector, is going to be the challenge, that we're not imposing costs on areas that are low risk. And most businesses, I believe, will be low risk, small businesses. I think what SAICA was looking at is SMEs and looking at accountants who they don't normally represent, but saying, how will you impact on that? But we're going to have to deal with those specific professions as well. So, Chair, by the time we go in February, I think we must just have the legislative mechanisms and move on the high risk. The rest of it, it's in our interest to move on, but we can hopefully we will have, I think, more time to act on them. I don't think it's reasonable to expect that we are going to solve our problems by February. We're not. And we're not signaling that to FATF when in our reports. So starting with a burning platform, a year is not a long time. And Honorable George is right. We have been scrambling since the report. We've had to move very fast. And yes, perhaps we could have moved faster by 2-3 months faster in some of these measures. But, when I look back, I do try and think, how could we have done it faster? But in a sense, we are where we are, but we have consulted. So if you look at the legislation, we have rushed it. And I think the comment period is going to be important. And we'll definitely have to make some changes because we will have limited public consultation. Normally, we would have liked more time, but just getting all the departments on board, doing a lot of persuading about why, let's take the non-profit sector. Many don't see why they should be included. Or speaking to the departments that are overseeing them, they don't have that regulatory approach yet. So to strengthen that, I think is pretty tough, and so it's taken a bit of time. And I think the key issue is if you look at that. I think we're still within time, as I said, to get the legislation, to do the technical compliance, and hopefully through the public consultation process, we can reduce some of the risk when you are forced to do something in a hurry. And on the implementation side, you don't have to wait for the law. There's been lots of meetings that we've had with all the authorities, relevant ones. In fact, there's too many. We haven't met, say, maybe sufficiently with the legal profession yet to see how they can have a risk-based approach. But certainly with the core ones, whether it's the Hawks, the NPA, Asset Forfeiture Unit, or State Security Services, we've been having lots of meetings to try and get them on board. And it does require quite fundamental changes often from them as well, to see how we can respond. And as I said, there are areas that we're still not going to be able to cover, like the area of cash or the Hawala system. Some of them will even say they're small businesses, but those are clearly the high-risk ones that we have to cover. We have to deal with the construction industry, the construction mafia. I mean, whose responsibility is it to deal with it? It's again the prosecuting authorities have to be able to act. So they're going to have to see what the high risks are, and that they believe in the national risk assessment that will be produced and actually implementing it. So we can't really do the NRA first. I think we have to include the sectors, but the challenge, the approach is then to risk assess as we go through. In terms of high value services, Peter, you can come in and answer that one. But clearly, generally, when you look at the approach, you do need to go beyond the individual to those that are connected to that individual, what services they are enjoying. And I would imagine that services would be covered. But again, you need to go profession by profession or service by service to ensure that they are covered. But I'll let Peter come in on that in a second. I'm almost done. As I said, there may be costs on high-risk ones, especially. So we're not saying there's no cost. We're not saying, and if this is enforced in a draconian way, it will have huge it can have significant economic implications on a small business. I think the challenge, Chair, is for us to come and account, and once the risk-based approaches are put in place, to see that we've excluded most small businesses effectively, because they are low risk. That's what we're going to have to do. And these processes will ensure that they are transparent, there's public comments taken, and so we can hopefully reach an accommodation or balance that's a sensible one. Entities don't really pay levies to the FIC. But again, as you saw with the financial sector levies bill, which is currently before the NCOP, we are getting many financial institutions to pay for the cost of regulating them or supervising them. And certainly down the line, when we look at high-risk sectors, these should be incorporated. This risk should be incorporated in their regulatory fees. It's not necessarily there at the moment, but something that we can deal with later. Peter, do you want to come in, or anyone else in our delegation, and just deal with that high value services?
Yes, thanks, Mom. So the drafting of this item that's currently proposed in the amendment to the schedule does not include people or institutions that provide services. It specifically refers to items, and the item is typically a physical thing. So when a physical thing that you can touch is being sold for a price of 100,000 Rand or more, that would fall within the scope of this item. The reason why we've focused on this is, firstly, on an 80-20 principle. If we want to expand this even wider to include also service providers where you're not dealing with tangible things that are being bought and sold, the scope becomes so wide that it really becomes impossible to regulate and supervise from a supervisory impact perspective. So we will achieve very little by expanding the scope even further. But if one thinks about it, a person who generally can spend this amount of money on buying expensive items will also be in that category of the same type of spender that would be spending their disposable income on expensive schools and education for children and houses and other things. So even though that category is not captured, the same category of people will come in touch with institutions in various items that would have to identify the person, capture their details, etc. So that the audit trail will be picked up regardless. And I think that's the objective of what we're trying to achieve. We're not trying for 100% coverage. We're trying to achieve enough coverage so that we can pick up the audit trail that can start off an investigation, collect the information, etc. Mama, I just want to quickly touch on one or two other things on small businesses and the cost of compliance and the registration. And there's also a question of the number of new entities that we expect will come into the scope of the FIC. I can ask Christopher Malan, who's responsible for that registration process, to just say a few words on that as well. The FIC does not charge a registration fee for registering. The FIC Act allows the FIC to, and any other supervisor, to recover the cost of an inspection, for instance, to check on compliance from the inspected institution, but we don't make use of that power. No, none of the supervisors so far have made use of that power to recover the cost of inspections, for instance, from the inspected institution. So we see that as part of our business, and we cover that from our budget allocations that are made available to us. So we don't charge or impose costs on institutions for registering or for being subject to our supervision. But the cost of compliance is a factor of the nature of the business and what they need to do in order to comply with the FIC Act. And cost is generally generated when the institution now has to do something new that it didn't do before so that it can comply with the FIC Act. So our approach to compliance is very much to see how does the institution run its business? What information does it generally collect about its customers? How much does it need to verify about its customers' identity, business, source of income, etc., in order to run a business? And we try to structure the compliance expectations from an institution around that so that it fits in with the way that the institution does business, and the institution doesn't have to start doing something different or start doing something new. So typically, the example of an accountant that incorporates a company for their customer would have to know a lot of information about that customer, would have to have verified that information so that they can draw up the memorandum of incorporation, so that they can file the papers with the CIPC, etc. And that already creates enough of an audit trail again, captures enough information in the records, and there wouldn't be an expectation that in such a case the accountant, for instance, in a run-of-the-mill incorporation process would have to do more in order to satisfy the obligations of the FIC Act, apart from the things like registration, etc. But where the institution deals with high-risk customers and high-risk business, they would have to do more. That's the point we were trying to make earlier, and I think Mama's touched on this as well. Even small businesses can get into high-risk business. And in those cases, they would have to do more to comply with the FIC Act. And that's how we're trying to mitigate the cost impact on institutions, because those would be the exception to the rule. And that is a function of the customer base, the type of services, the type of products that the business provides to their customers that would place it in a high-risk area of business. And where the business would have to have more secure verification of its customers' information and have a better understanding of its customers' business so that it can identify when something needs to be reported to the FIC. So the cost implication is inherently mitigated or determined by the framework of the FIC Act that requires institutions to protect themselves from being exploited by money launderers, criminals that want to use the business as a front for banking their criminal proceeds or for channeling their proceeds out of the country. Christopher, I hope you're online and can come in on the question on the new entities, because we have done some estimate on that, and we have actually been in discussion with the industries that were identified for inclusion for some time, and in order to prepare the proposals for the minister in the consultation process that he initiated in June 2020. So there has been a long period of engagement with the different industries, and for us to get a good feel of the type of businesses and the numbers that we would expect to bring into the scope of the FIC Act. So with your permission, Mr. Chair, and Mamo, if I can ask Christopher to also talk a bit about that. Thanks.
Good morning, Chairperson, honourable members, colleagues. On the issue of the numbers, we made it a very important part of our consultation process that when consulting, we got a sense of estimated players then currently in the market for two reasons. Firstly, to get a sense of what the stress factor is going to be on the FIC systems to register them and keep these accounts up to date. And it is important that we do the link between the registration, because through registration, they are enabled to file reports to us. And one can argue that the entire FIC system or the anti-money laundering system is there for two purposes. Firstly, to enable the institutions to be better armed with control measures to prevent themselves being abused by the criminal elements that would seek to, to make these entities a facilitator knowingly or unknowingly. So the whole rationale is, through this mechanism, the institution is much more aware that it is in a vulnerable sector and is aware of what to look out for. They then confirm that via registration with us, because we do want them also to be a good, what you call corporate citizen, in the sense that once they are aware that they can be subject to abuse, they are then armed with knowledge to detect that abuse. And once they detect the abuse, we would like them to report that activity to us. And the only way they can report to the FIC is through the registration platform. So that's why it's very critical we spend a lot of time estimating the universe and ensuring we know who would be in the universe, so that when we do outreach, we seek to get the entire universe registered with us. So what are the figures showing us? The credit providers we estimate would be about 6,400. on the high value goods dealers, we are looking at focusing on the more prominent areas, about 12,500. The trust property service providers and the company service provider is quite a huge market. The reason why it's a huge market is that attorneys currently and accountants and other financial advisors do play a role in advising persons to set up structures for ordinary business purposes, but also for illegal purposes, unknowingly, one could argue. And there we're looking at a scan of approximately, and as I said, it includes attorneys, it would include accountants that are operating in this environment and other financial advisors and the like, about 5,000. On the crypto assets, we have had very extensive engagements with them. They are quite a eager industry to be within the regulatory net of registration because it gives them the credibility they seek so dearly. And we have effectively already registered on a voluntary basis close to 100 of those entities. So we do seek to be very forthcoming as well. We have registered them as in the remittance cross-border category. Once they are formally itemized, we will move them into the new item scheduled. The property practitioners, depending on market conditions, they fluctuate, as you know. When the economy goes down, less houses get sold. When the economy goes up, there's a boom and people sell houses. So there's approximately 9,000, and those are the estimates from the regulatory authority. From the law societies and the Legal Practice Council, their estimates to us is about 16,000. And there are approximately 5,000 gaming institutions. Now, not all of them are new sectors, but I'm giving you a sense of the extent and size of the non-financial sector that we would be taking responsibility for. The first responsibility is obviously to register all of them, to enable them to understand they are subject to being abused, and secondly, to arm them with the means to report to the FIC. And flowing from that, once they're registered with us, we will engage with them on quite an extensive education and awareness program to enable them to be part of the crime fighting issue, and first and foremost to protect their own businesses from being abused. Thank you.
Thank you, Christopher. Chair, if I may just end off, I think, I just wanted to also comment. I mean, I think what Honorable George said, look, it's going to be hard to prevent grey listing, but I think we can really make significant progress. And if we do, and let's say there's only 1 or 2 or 3 areas, it means that the action plans that we almost get imposed on us will cover very little, and we can get out of it quite quickly. That's why the challenge is that for each of these areas, if we look at the national risk assessment, that we really cover, the entire ground. We're looking at the recommended actions that FATF had certainly come up with. At the very least, we have to show progress against those. IO by IO, the 11 measures, immediate outcomes by immediate outcomes, and have in place our own plan so that nothing has to be imposed on us if you want to get off the grey listing. At least, even if we've not made progress, but we have a plan, it will hold us in good stead. But as I said, and I've seen the banking CEOs, I think some of them, I understand it is a high risk, but I think they, to be honest, very few people, financial analysts and so on, this grey listing threat has come as a bit of a shock because we are the first FATF member being placed like this. The others like Pakistan or Malta or Mauritius are not members of FATF, they belong to regions. So many are just beginning to understand the FATF process, and the FATF process is extremely confusing, and their language, I think, is very hard to really interpret. And I think, those assessors have their own methodology and so on. One needs to understand that. So many of your investment analysts actually don't really understand the process. I think economically, yes, it will be negative. I'm not convinced it's as negative. If we've demonstrated action, and we got to demonstrate, we got to communicate. So let's take correspondent banks. If they see that we've now changed these laws and we passed the technical compliance, that we made real assessment on the risk-based approaches, that our banking sector is safe, you can reduce the cost to the banking system coming from the correspondent banks, because we still need access to the dollar, to the pound, to the renminbi, so wherever the banks, overseas banks are with their currency, that they continue to have confidence in our banking system, even if the issue may be in our prosecuting agencies and investigative agencies. And as I said, the big concern is about, I guess, the role of these syndicates of corruption. If you look at and state capture, it's written all over the place in the FATF report, that, it's not that they're commenting on it. They say, but you say there's all of these things happening, but you have no prosecutions. And your investigations, I guess, take very long. Are you using all the information that's available? So our agencies have to demonstrate that generally, they don't look at any specific case. They just have to demonstrate that generally this is how we deal with it. So I think that this threat is also an opportunity for us to fix up our ability to deal with financial crimes. And I think we can make huge progress. And I'm still confident. I haven't given up that we're going to prevent grey listing. I think we can demonstrate progress. So up to now, that's what we focused on. Yes, if it happens, hopefully we'll have the plan, and it will be very few items and can get out of it very quickly. So we are looking at that prospect. Thank you, Chair. I think we've answered all the questions. We don't have all the answers, let me emphasize, and there's many players. And it may be a good idea, even as you do the legislation with the general laws bill that's coming, that Parliament finds a way of getting all the other authorities involved, especially in the criminal justice sector, to come and account as well in public about how they're responding to the recommended actions that are being proposed and what progress that they've made. That will all help us if there are such hearings before the end of the year. Thank you, Chair.
Thanks very much for the responses. I think I see, Dr. George, you want to make a follow-up question?
Yes, Chair, I did. Thank you very much for the responses. It is clear. And yeah, I think as the acting DG said, it's complicated, and, we are also an emerging player in this rather complicated arena. So it is what it is. Having said that, I also prefer to remain on the most positive side, look at the upside rather than the downside. I think that's very important. So at the same time, also try to mitigate as much as possible the problem that might be coming. So my question is this: given that we are not far from this decision that's going to get taken, and there is in fact a reasonably high probability that we would get grey listed, although we would all want it not to happen, and that there may well be something that happens that prevents that. We don't know that. So it's unknown and there's risk. So my question is this: has the Treasury applied its mind or started applying its mind on what we are going to do in the event that we are grey listed? I agree with you that with the acting Director General that the consequences aren't completely known. The key thing is that what other jurisdictions do, because they might make it very difficult to move our money across borders, etc., impact trade and so on. So what do we do in the event that we are in fact grey listed, and how we manage that? Because it's like if you're heading towards some kind of iceberg and you don't hit it, that's great. And we do everything not to. But in the event that you do, what is it that you have to do? And I think that's probably now a very important thing to consider. And I'd like to know whether the Treasury has been giving that at least some significant thought. Thank you.
Thanks, Dr. George. Back to National Treasury and FIC.
So, yes, Chair, we are doing that. Look, we've been talking to various economists, various players in the market to try and understand specifically what the grey listing will mean, obviously for the economy as a whole. So we're still in a process of developing these, and we're very open to also getting, as you know, when it comes to economists, I mean, lots of people outside are doing their own assessment. The SARB will be doing its own. So, you know, we are in conversation with people. Perhaps we can do it a bit more systematically, and we will, so that we will have plans on that. It won't be a surprise. But some of it does depend on what progress, as I said, we make on the legislation and on those immediate outcomes, so we can understand, you know, which sectors will be negatively impacted. Because, and a lot is about both communication and what FATF will say. If FATF says, look, we've seen real progress, these guys have really tried, there's still these three areas, but we're happy with the banking sector as an example. That means that your correspondent banks are a bit more comfortable. So the detail of that will also depend on closer to it, like when we in December, January, talking to them, we'll begin to have a feel for where we've made good progress. And as I said, not all progress, in this one, it's across government, other authorities and how they respond. But I take the point Dr. George is saying, Honorable George is saying, and certainly at some point I think we'll make public our analysis as well, and certainly have plans to deal with if we do get to grey listing, which, as I said, is likely, but we're still trying to avoid it, Chair. But we need to look at all options. Can I say, Chair, just as I end, I mean, I've found, I must say, I've not found resistance within government. I've found real concern and real commitment to act to prevent this. The challenge is, can we actually do, you know, we may intend not to have it, but we have to do a lot more. We have to change our ways of working in many instances and our priorities. And as I said, you know, do you have a national risk assessment plan that you believe in and that it really guides your work and you're actually doing something about it? So that, I think, is a bigger challenge. Can we do what we say we want to do?
Okay. Dr. George, why are you so worried that you think there's a high likelihood that will be grey listed? Maybe you can share your concerns with us.
Chairperson, I think quite simply, given that I've worked in the financial industry for a long time, and also I've been following this with great interest, and also that, you know, obviously I speak to many people in my job, and the international banking fraternity often speak to me and share their views on South Africa, etc. And this has been a long time coming. And we do know that we've had, what would you call them, problems with money laundering, money leaking out of the public sector, etc., and other problems, as the acting DG has said. And I think if you just simply look at the process, and if you look at how it all hangs together, it seems likely that it would happen. I mean, you have to be realistic. It is absolutely right what the acting DG says, is that it's a complicated thing and it's an international thing, and we are a relatively small economy with lots of complexities. It just is a fact. So when you're dealing in that space as a relatively small developing economy, it is difficult. That's just quite simple. So if you look at the signs and you look at history of what happened to other countries, then, I mean, obviously we wouldn't want it to happen, but it looks likely because time is basically running out. The law needs to be changed clearly. It needs to be implemented, and there needs to be some kind of certainty, I would expect. I don't know the facts if at all, but clearly if they're regulating, that's how they work, because it's processes, etc. So it is looking very likely. And as we all say, of course, we wouldn't want it to happen. We wouldn't want it to happen. But if it does, then we need to manage that and brace for the impact as much as possible, which I think is a sensible approach. So I certainly remain as much as possible, although hope is not a strategy, I also remain very hopeful that we can avoid that from happening. But if it has happened, it's going to impact on our economy, most certainly. And that is not going to be good for anybody. So that's obviously my concern, but we may well avoid it. But should we not, then we must make sure we're as ready as we possibly can be for that eventuality. Thank you, Chair.
Okay. Thanks, Dr. George. I think we have exhausted item 5, responses from National Treasury and FIC. Are there announcements?
No announcements except that our next meeting will be next week, Tuesday.
Okay.
We have nothing for the rest of this week.
Okay. Comrade Momo and Nokwanda, can you please remain in the platform when others will be leaving? Thanks very much, colleagues and stakeholders who are in the platform, the media. We have come to an end of our meeting. Thanks, National Treasury and FIC. Let's adjourn our meeting. We'll take the process to the next stage of the committee, processing the report and then take it to the National Assembly. Thanks very much.
Thank you, Chair.
There's no Kwanda still here.
Yes, I'm still here.
Thank you, Chair.
Noxie.
Yes, I'm still here, Chair. Oh, not me. Oh, sorry.
Okay.
Noxie.
Hi, Chair. Hi, Chair.
America, where are you going?
I'm in Canada for the Commonwealth Parliamentary Association Conference.
Oh, yeah. Very far.
Shame, yeah. My granddaughter said so yesterday. She said, "Are you still far?" And I'm like, "Yes, darling." And she says, "Okay." I tell her that it took me like 24 hours to come here. And then Did the pilot not fall asleep?
And what's the time for you? You must be at 3 o'clock or in the night.
Yes, Mama. I was going to apologize about that as well because when the meeting starts, it's 3 a.m. here, and I'm like, I'm fiddling, and then apparently I also touched the video. It opens while I'm in bed. It's so scandalous. But the church called me quickly, and then Beauty also assisted to switch it off. No, it's too early.
Colleagues, you can log out of the meeting. We just want to have a short caucus with the acting DG and Nokwanda and Comrade Noxie until we meet again next week.
Can the committee secretary not help? Like
Recording stopped.
You got the YouTube streaming.
I've just stopped the recording, so YouTube they won't be able to get the sound because I have asked them to log off.
Why are they still in the platform? You can't trust technology.